Testing, testing. Are you guys able to hear me? Hey, can you hear me now? Okay.
All right, hi everyone, welcome back. Okay, apologies for the delay. Some just slight technical issues with the mic. All right, okay. All right, thank you for joining this session today, live analysis session. And I hope you've managed to catch Desmond's pre-market live analysis earlier today as well. All right, so but before we start things off, as usual, we go through the disclaimer. So do take note that any information in this video does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. All information is presented as educational material only. And do take note of the risk warning that comes with CFDs as well. They are complex instruments and come with a high risk of losing money rapidly due to leverage. All right, hi everyone. All right, welcome. All right, Jamilu, Juliet, Julian, Mike. All right, great to see familiar faces as well. Tariq as well. All right, okay. My name is Ketan Rameshchandra. So I'm an investment analyst here at Everest Fortune Group. So this webinar series is brought to you with a special partnership together with IC Markets and Everest Fortune Group, where we have been the finalists for the best FX and equity research for the following years 2019, 2020, and 2021. Okay, just a simple agenda for today, just to take note, take note of the key economic events coming up this week. We have inflation data from Canada and Australia due on the 27th and 28th of June, Tuesday and Wednesday. And then on Wednesday, we also have the start of the ECB forum, where we'll have major central banks, well, major heads of central banks of from the various countries, so the Bank of England, the Fed as well, and of course ECB President Christine Lagarde speaking at during this forum. And on Friday, 30th of June, we will have the PCE price index, which is an important inflation gauge from the US. So do take note of these events this week. Okay, so just to quickly look through on Forex Factory. Okay, so my times are on GMT. So Tuesday, 27th June, we have Canadian CPI data coming out at 12:30 p.m. GMT. Then on Wednesday, 1:30 a.m. GMT, we have Australia CPI. Then we have, of course, the ECB forum, right? The forum is entitled Policy Panel. So I guess they'll be talking about various monetary policy topics and decisions as well. And also they'll probably cover inflation and any other economic matters during this forum. So we have the Bank of England Governor Andrew Bailey, Bank of Japan Governor Ueda, and of course Fed Chairman Jerome Powell and Christine Lagarde as well from the ECB. And then we have PCE price index, which is due on Friday, 30th of June at 12:30 p.m. GMT. So this is the inflation gauge from the US as well. The Federal Reserve keeps a very close watch on this metric as well, together with the CPI reading from the Bureau of Labor Statistics. Okay, with that, so do take note of these events coming out today, this week rather, sorry. Okay, all right. Hi, Amar, welcome to today's session. Okay, so we'll start off. All right, okay, first of all, is there any requests? Otherwise, we'll start off with the dollar index first. Yeah, maybe you can start off with the dollar index first, and then we can transition into the other currency pairs and gold and as well as oil. And also, we can look through some of the indices if you wish. And also, do drop your requests in the chat box, right? Okay, so if right now I have the daily chart for the dollar index. Okay, this I'm on a daily time frame. So these were the level. If you had tuned in earlier this morning with Desmond, he would have gone through to you with you on the resistance and support levels to look out for on the daily time frame. Right, we can see the dollar index uh, All right, Julian. Okay, pound yen. Okay, we'll definitely get to pound yen as well. Okay, for sure. Okay, so we can see the dollar index has been pulling back pretty sharply over the last 2 weeks, but towards the end of last week, it actually found support at around 102, and the last 2 days, we saw the dollar index bounce pretty strongly. Today, it looks to be pretty weak. I think we are likely to see the resumption of the downward slide continue for the dollar index. Okay, right. And okay, so with that, let's just zoom in onto. Okay, so now that we have seen the levels, right? If you had not tuned in to watch Desmond's pre-market analysis earlier today, do take note that on a daily time frame, these are the resistance and support levels for the dollar index. And now we shall zoom in into the 4-hour time chart and try and identify levels that are more closer, right? Okay. We also have requests for euro dollar. Definitely we'll go through that, and Kiwi dollar as well. Okay, for sure. All right. So from dollar index, we'll move on to euro dollar and Kiwi as well. Natural transition. Okay, so now we'll zoom in into the 4-hour chart. Okay, so here we are on the 4-hour chart on the dollar index. Okay, now let's try and identify levels that are more closer and relevant for intraday trading, or for the next 1 or 2 days at least, right? Okay, this is not required. Okay, first of all, we can see there is some okay, you can take the recent swing high as well as an immediate resistance. If you're looking for a resistance level that's a bit closer than where the current first resistance is, we can look here, which also serves as a decent overlap. So this level here at 103.11, we can identify this as a resistance level that's a bit more closer to current where price is currently trading. Okay, but we expect dollar index to fall this week to resume its downtrend. Okay, so and with regards, it is actually, if we look at something very close, it's actually sitting at a pretty, it's very close to a resistance level as well. I'm going to highlight this in green, dotted resistance. So this, we have an intermediate support here at 102.71, and we have an intermediate resistance here at 103.11. Right, so these are levels to watch out for on a slide that are closer to where price is currently trading. So as we expect dollar index to fall today, so it's quite likely we will see it breaking through this support level at 102.71. And okay, so now that we have identified that, let's see where would the next potential support be, and also let's see if there are any Fibonacci levels to look out for as well. Okay, so the next support level, what we can see, this is a pretty decent level as well. So as you can see in the past, there's a nice overlap here. Okay, so we can see instances where price has rejected, right, has been rejected at these levels here, and found support here as well. Although it did break through it, you could argue, yeah, it did form a little bit of support around this level before it finally broke through to head lower. So if we go back to the more to identify resistance levels that are closer to where price is trading, obviously the first one would be at 102.70, and we are forecasting that the dollar index will be dropping this week. So today, if it does break through this immediate support at 102.70, I think we can expect dollar index to fall at least towards 102.23 uh, by tomorrow, by today or by tomorrow, right? Okay, we can see that this is the next area of support for the dollar index. And on the upside, we have the intermediate resistance here. We can see where price has been rejected over here at 103.11, found support close to it, found support here again before finally breaking through, finding resistance here last week as well. So you can see multiple instances where price has reacted off uh, the this resistance level at 103.11 and this second support at 102.23. Okay, so this is for the dollar index. Okay, I was talking about Fibonacci. Okay, so when we've done the Fibonacci retracement on this leg of the move from this swing low on 8th of May to the swing high on 31st of May, we can see all the other levels are broken. Thus, we're not going to highlight all the other levels. We are just keeping 78.6% as a reference. So you can see price did come pretty close to this level here before bouncing higher. Okay, so this is what we have as a Fibonacci retracement level with regards to support. And let's see if there's any resistance levels that we can highlight. So we'll take, oops, sorry. We will take this swing high on 5th of June to the swing low last week on 22nd of June. Okay, so we'll pull up all the fibs. Oops. Okay, so what we'll do is we'll keep 50% and 61%, because you can see 50% price, there's a wick here. The price didn't break through this retracement level, so we can still keep this 50% retracement level as a key to emphasize that this area at 103.11 is a key intermediate resistance area. And we can also see that the 61.8% Fibonacci retracement level lines up very well with the first resistance as well, right? So we're using a combination of Fibonacci retracements plus overlap resistance levels to identify significant resistance areas. Okay, so for this Fibonacci retracement, we will just keep 50 and 61. All right, so you can see it clearly. Yeah. Right. Okay. Okay. Hi, Bester. Yes. Okay. Definitely, we'll do dollar yen as well after the euro and kiwi. Okay. Right. So we can see how we've identified uh, the resistance and support levels that are close to where price is currently trading by using a combination of Fibonacci retracement levels and using overlap as well. Right. Okay. So what I'll do, I'll just get rid of all of this. Just all right, okay. So do take note that on the 4-hour time frame, these are the resistance and support areas to look out for that are closer to where price is currently trading. All right. Okay, next we'll move on to the euro. So naturally, if we expect uh, the dollar index to fall, then it is quite likely the euro should rise, pound dollar should rise as well, and dollar yen should be falling. So let's just go through it together. Which is DXY and symbols list. Okay. Besta DXY or is a dollar index. Basically, it's a basket of is an index that measures the value of the US dollar versus a basket of currencies, which are consist of the euro, the British pound, sterling pound, Japanese yen, Canadian dollar, Swedish krona, and the Swiss franc, right? So it's a basket of, it's an index that measures the value of the US dollar against a basket of currencies, okay? And the symbol for the dollar index is DXY, as we can see here on my chart, okay? So if you look here, up over here, DXY, right? Symbol search, that's how you can search for it. And it's also available on the trading platform as well for IC markets. Okay, so now we'll move on to the euro dollar. So as expected, if the dollar index is falling, then naturally the euro should be rising as well. Okay, so once again, these were the, okay, I'm going to switch back to the daily chart first. So these were the levels that were identified this morning, right, during the pre-market analysis. So we can see that we have the first support and second support at first support at 1.0688, second support at 1.0520, and first resistance at 1.1067, right? And second resistance way up here. Okay, but let's now again zoom in into the 4-hour time frame and try and identify levels that are more closer and levels that we can work with for today and tomorrow as well. All right. Okay. So we have done. Okay. This was a Fibonacci projection done. Projection was done to highlight, to identify the support, the area for the second support. Okay. So this is why we have done this Fibonacci projection here. Fibonacci projection involves 3 points. So this is the starting point here on the top left, down to the swing low here, and the ending point is this recent swing high. So by using the projection, Fibonacci projection, we are able to identify uh, a potential support area should the first support level be broken. Okay, now let's try and identify levels that are closer. So what I will do first is I'll do a Fibonacci retracement from the swing low on 31st of May to the swing high on 22nd of June. Right, okay, so once again, we'll pull up all the fibs to see exactly where we are. Okay, so naturally 23.6% is broken, so we will no longer keep that. 38.2% is broken as well, so that's also not valid anymore. So we'll keep 50, 6 and 61. 78.6 is a bit too far, so we'll just keep 50% and 61% Fibonacci retracement levels, and after that we'll try and identify some overlap levels as well. Okay. So we can see here, by using this swing low, I can see a nice overlap as well, because back on the 12th of May, price found support at 1.0850. Then it ran into a bit of resistance on 17th of May as well. Then ran into resistance on 13th of June as well. So we can see multiple instances. Oh, sorry, not 13th of June. Okay, so this doesn't count, so this is where 50%. So we can see multiple instances where price has, if I zoom out a little bit more, you can see it lines up very well with on the 10th of April as well. So sometimes it is also quite important to zoom out, even though you're on a slightly uh, smaller time frame, even on a 1-hour chart or 4-hour chart, is good to zoom out to identify major support or major overlapping areas. So I'm going to use this level at 1.0848 as the immediate support for the euro dollar. Right, we can see support here on 10th of April, 12th of May, running into a bit of resistance on 18th of May, and finding, of course, last week finding very strong support here on Friday as well. Right, so this would be our immediate support for the euro dollar. And then if you go slightly lower for the next support, probably we can use this level here as well at 1.0788, because we can see price running into resistance here on 21st of March, finding support on 3rd of April, finding a little bit of resistance on 24th of May as well, and then finding resistance on 8th of June. And we can also see it aligns slightly above the 61.8% Fibonacci retracement level as well. So we have a couple of factors that help us to identify this area as a second support area for the euro dollar. Okay, now in terms of immediate resistance, okay, we can see something pretty clearly here as well. If we look at this price level, I'm going to switch this to resistance. Okay, so we can see price found support here at 17th of April. Okay, found a little bit of support here on 11th of May, and then it broke below, and finally it made a V-shaped recovery to come back up, breaking through uh, the previous support, which was then resistance. It acted as resistance for a couple of days on 20th of June, and now it's acting as a resistance level again. So we have multiple instances where the level of 1.0910 uh, has acted as major resistance and support for the euro dollar. So this would be our immediate resistance level for the euro dollar. And then should this level be broken, because we expect dollar index to fall, so should this level be broken, I think we could see the next resistance for the euro dollar coming up probably somewhere. Let's see if we just zoom out. Probably you could take, I would probably take it probably around, there's no real nice overlap, so I would just take it as the swing high, right? So the next level would be around this region. Okay, so should, oh, actually, hang on. Sorry, I found something a bit more relevant, more close. Okay, so if we look here, we can see, we can look at the level of 1.0955. We can see price reacting off this level as a support back on 2nd of May, finding pretty decent support on 9th and 10th of May as well, before price finally gave way. Then we found resistance about 2 weeks ago on 16th of June. So yes, so if the first resistance level at 1.0910 gets broken, then the next area of resistance for the euro dollar would be at 1.0955. All right. So do take note of these levels for the euro dollar. And oh, okay, we can also try and do a Fibonacci retracement. We do it on this leg of the move. Okay, it's probably you can still do it. So I will keep. So we have 38 and okay, it's a bit messy, but I'm just going to clean it up. We'll keep 38 and 61. Okay, so I'll just zoom in a little bit here so it's a bit more clearer. Yep, okay. So we've done a Fibonacci retracement on this swing high on 22nd of June to the swing low on 23rd of June. So we can see that the retracement level of at 38.2% lines up pretty well with this overlap at 1.0910, and we can also see the 61.8% Fibonacci retracement level line up just under the second resistance level at 1.0955. Right, so we're once again we're using a combination of Fibonacci retracement levels and overlaps to identify significant resistance areas. All right, so these are uh, levels, resistance and support levels that are much closer to where price is currently trading, and will be more effective for us to use these levels to plan your trades for the next day or two. All right, okay. Now we shall slide into dollar yen. Oh no, sorry. We'll do the Kiwi dollar first. We'll do Kiwi dollar first, and then we'll go into dollar yen, and then we'll go to pound yen as well. Okay, so here dollar Kiwi. Okay, so once again, this is the daily chart. These were the levels that were identified once again earlier this morning. Okay. Right. Okay, so let's try and find more immediate levels that we can use for the next 1 or 2 days. Okay, so we can see. Okay, just as a top overview, you can see the Kiwi has been sort of been trading in a bearish channel. We can see it touch the upper line a couple of times, and the bottom line here as well. It's not the best bearish channel, but you still can see that price has been generally trending lower, but of course with big relatively strong retracements to the upside as well. Okay, so let's now go into the 4-hour chart. Okay, we can see. All right, first let's see if we can do the Fibonacci on the swing low from 31st of May to the swing high of 16th of June. Try and identify some support levels. Okay, so we can see 50%. Uh, okay, it's very close to where the actual first support is. So I think we'll use this as a zone, right? So what I'll do is in terms of support, I'll keep 50 here, 61, we have it here. Okay, I'll just keep 50%, right? And then what I'll do is I would identify this as a support zone. As you can see here, right? Okay, so this would be a major support zone for the next 1 to 2 days. We can see the Kiwi pulling back. All right, hi Peter. Okay, yeah, we'll go into Aussie Cat after Pound Yen as well. All right, okay, we'll cover that as well. All right, so although the dollar index is dropping generally, right? But in this case, the Kiwi is kind of weak, right? I think it was earlier today was one of the worst, I think, performing currencies to start this new week. So despite dollar index falling, uh, the Kiwi is actually much more weaker than the dollar. So that is why the Kiwi is falling, right? Kiwi dollar is falling down despite dollar index also falling. Okay, so the first major resist support area is here between 0.6096 to 0.6115. All right. Then on the resistance side, something the first resistance is definitely way too far for the 4 hour chart. Let's see if we can find something a little bit more closer to work with. This support is pretty decent. This okay. I would as a first resistance, I would use this level here. Okay, we can see. Okay, so this level at dot 6207, we can see multiple instances where price has reacted off it as a support back on 2nd of April, uh, 7th April, and then running into resistance on 19th April, finding support again on 18th of May, and then of course it broke through here, and then finding resistance on 22nd of June as well. So and resistance level that's much closer to where price is trading would be this level at 6207, because we can see a very nice overlap as well with regards to I mean we can see multiple overlaps. And then for the next resistance level, it would probably, yeah, I'll probably take the swing high, because that's the swing high here on 16th of June. Although there's no nice overlaps, but yeah, we'll just take this swing high as well. I think we can also do a Fibonacci retracement on this. Okay, not the best move, but I think this should still be pretty all right. So we can see price. So I'll just keep 78.6 because that's the only one. Right, okay, so let's just zoom in a little bit. Okay, so here again, once again, we're on a 4 hour chart. We've done the Fibonacci retracement on this leg of the move. We can see, oh, gee, wait, hang on. I should probably try and keep, let me see, 50 and probably 61. Actually, not really. Okay, they're not really good overlaps for the Fibonacci. It doesn't line up well with any major overlaps, but I think the closest one would probably be the 61%. Right, I think we'll just keep the 61% because that lines up quite close to the overlap at 0.6207. Right, I think what is important is also to try not to use any indicator in isolation, because sometimes it's better to have a combination of at least 2 to 3 various other indicators to help us identify major support or resistance area as well, right? Okay, so I think for this case on the resistance side, The first resistance will be coming up at 62.07, which is also sitting above the 61.8 Fibonacci retracement level. The second retracement will be at the swing high on 16th of June. First support, we've identified a zone, as you can see a nice overlap that lines up pretty well with the 50% Fibonacci retracement on this leg of the move. And we also have this first support solid line that was identified on the daily time frame. And then the second support is identified. If I zoom in, okay, on the 4-hour chart, it doesn't look very clean, but I think that if you look on the daily chart, this second support was identified using the daily chart, so you can see that the bodies of the candle line up pretty well. So that is why sometimes when you zoom in on the smaller time frames, it can look a little bit messy. Okay, so right. Okay, so this is Kiwi dollar. So what? Okay, then we'll go to dollar yen and then pound yen and then Aussie cat, and then we'll go to gold after. Okay, so yes, dollar yen. Okay, once again, this is the daily. This is the daily chart for dollar yen. These are the levels that were for the daily support and resistance levels for the daily time frame. Okay, do take note of these levels for the overarching view on this pair. Now we'll zoom in onto the 4-hour chart and identify levels that are more workable. Okay, so right, you can do a Fibonacci retracement on this leg of the move. This is from here. How does this capture? I think this is also pretty decent as well. Okay, let me see. Basically, when we're doing Fibonacci retracement, we like the trend line here, as you can see here, the blue dotted line, to capture the price structure as much as possible. So although there is some deviation in the price structure from the trend line, I think generally this is still pretty okay uh, Fibonacci retracement to use from this swing low on 8th of June to the swing high last week. Okay, so let's just pull up all the fib levels. Okay, so we can see our first support sitting slightly above the 38.2% Fibonacci retracement. You could also say that, okay, there's an intermediate support at the 23.6%, so we'll keep 23.38 as more immediate levels to work with. You also can see a strong support at 50 as well by the overlap action. So we'll keep 23.38 and 50. Right? Okay. So yes, so these are the immediate support would be around here, like an intermediate support level for the dollar yen would be at 142.65. As you can see, price finding support here last week, and also lines up pretty well with the 23.6% Fibonacci retracement. The first support, which was identified on a daily time frame, sits slightly above the 38.2 Fibonacci retracement level as well. So this is the next key support area. And we can also see that 50% Fibonacci retracement level lines up well with this overlap here as well. Although this level at 141.33 is a bit too far from where price is currently trading, but it's something to look out for in the future should these support levels be broken in the next one or two, or should these levels be broken this week. Okay, in terms of resistance, naturally we'll take the swing high as the immediate resistance. Let's just zoom out to see if there's any other levels that we can identify with. No, the first resistance is identified here at 145.72. This is done using the daily time frame. So in terms of immediate resistance, yeah, I think so, it would be 143.143.87, and then the immediate support level would be at 142.65, which is lines up well with the 23.6% Fibonacci retracement level, and the second immediate support area would be at 142.11. Okay, this is dollar yen. Now we'll go to pound yen as well. Okay, so pound yen. Let me just remove all this. Okay, so let's just start with a quick overview. Okay, so naturally, with the Bank of Japan being the most dovish central bank uh, in the world, right? They are the only central bank that has continued to keep interest rates at negative 0.1%, while everyone else has been raising rates. So naturally, the yen is, generally speaking, would be a very weak currency versus the other pair, versus its peers. So okay, so as you can see, this is a daily chart. We had a big move up in dollar yen. So let's just try and find levels, support levels here on the daily chart. Okay, so this is pretty, and also is it, oh, wow, pound yen is actually, wow, it's come to a almost 8-year high. Yeah, it's coming to a, yeah, it's 8-year high. So you can see how much dollar yen has risen over the last year or so, or rather just, oh no, sorry, from this year alone, just this year alone, it has come up to as high as 182, which is almost like a 8-year high. Okay, so do take note of that these levels as well. Okay, so in terms of, okay, so let's go into the 4-hour chart. So we have this levels here. Okay, so okay, we can also do in terms of resistance. Okay, we can use a Fibonacci retracement, a projection, try and see where the next oh, wait, right, okay, so I'm going to use Fibonacci projection here to identify where the next support resistance levels would be. Okay, so we are using Fibonacci projection from this swing low on 7th of June to the swing high on 18th of, oh sorry, not 7th of June. Yeah, 7th of June to the swing high on 19th of June, and then ending here on 20th of June. The reason we're doing this, we're trying to find or identify a potential resistance area. As I mentioned, this is like an 8-year high for the dollar yen, a pound yen. So there's no other overlaps that we can generally use. So I would put this level as my first resistance here. And then for something more actionable, I would use the recent swing high as an intermediate resistance area. Okay, so 180, so 183 would be the first immediate resistance area. Excuse me. And then the next major resistance would be at 185.83, which is identified by using Fibonacci projection. Okay, now what about support? Okay, something more actionable in regards to support. We can see a pretty decent overlap here as well. So this could be a intermediate resistance level for a pound yen. Sorry. Okay, so do take note. 179.92 would be a immediate support area. So if we see price pull back to here and pound yen is still bullish, we should expect it to reverse off this level and go higher. Big combination of the Bank of England being more hawkish than the Bank of Japan, right? So we could see pound yen probably pull back today, or the next 1 or 2 days. And if it does find support around this level at 179.93, then it's quite likely we could see a potential reversal of this level. Okay, pound yen. Anything else that I can try and identify? Let's see. Any other support levels? Okay, so I'm using this swing low here on 11th of May and using the swing high on 26th of June. And let's see if we can identify any Fibonacci levels that line up. Okay, so we can see 23.6% lines up quite close to the overlap support that we had identified earlier. So I think let's just keep 23%, right? Okay, so we can keep 23% and this would be our potential zone of support for pound yen. Okay, so this level between 179.40 and 179.93 would be our first support zone. The immediate resistance naturally be the swing high, and then the next major resistance area is at 185.83, which is found by using Fibonacci projection. Okay, pound yen, and then okay, we'll do Aussie cat, and then we'll go on to gold. Aussie cat, where are you? All right, okay. Wow, okay, Canadian dollar has been really strong over the last few days as well. Even if you look at, just for a quick comparison, if you look at dollar cat, last 2 weeks is really gained versus not only the US dollar but also in this case versus the Australian dollar as well. So you can see significant strength in the Canadian dollar. Okay, now let's see what we can do. Okay, so on this daily chart, okay, let's see. Okay, here we're going to use Fibonacci extension to try and find the next support areas. Okay, so we can see the next 127 is a key level. Okay, so I'm going to keep just 127%. So what we've done is we've done a Fibonacci retracement level here from the swing low on 1st of June to the swing high on 19th of June. We are keeping 127% because this is an extension level. So this will help us to identify the next potential support area. As you can see, this is a nice inverted Nike tick, right? So price has completely retraced 100% of the move. And if it does continue to go lower, the next support area should be coming in around 127% Fibonacci extension area. Okay, now let's see if there's any other nice overlaps as well. Okay, so you can see over here something more closer in terms of support. You can see this level here at 0.8758 as a level that's a little bit closer to where price is currently trading. We see a decent overlap over here. Zoom out. Okay, nothing much. Next support, yeah, would probably next support zone would probably be around here. Okay, in terms of resistance, you can see pretty decent level here on the daily chart. At least for the daily chart, you can see some resistance at this level, although this might be a bit too far. But okay, let's then okay, we got something a little bit more closer as well. I think this is actually probably a little bit better in terms of first resistance. Okay, now let's zoom in onto the 4-hour chart. Right. Okay. So I think we'll keep the first support for Aussie Cat at 0.8758. It's a decent overlap. First resistance. Okay. I think this something more actionable would probably be somewhere around here. Okay, so at So at 88.62 would be resistance level as well, because you can see price reacting of this level here back on 25th of May as a support, again on 26th of May, then again on 30th of May breaking through, and finding support, acting support here again on 5th of June. So I guess this is a pretty decent, not the best overlap, once again, not the best overlap, but something that does look pretty uh, quite significant, right? Okay, let's see if we can do Fibonacci retracement for Aussie cat, because the Australian dollar is also pretty weak. If you look at where Aussie is trading, yeah, Aussie looks pretty big. We could have, but okay, just looking at technicals, Aussie cat, it does look oversold, but you just have to be mindful here that if it does hold this level, right, this zone, okay, this looks like a pretty important zone here, this support zone. So you can see the overlap as well on the daily chart. So, okay, if I go back to daily chart, yeah, okay, you can see the significant level here. So if this support zone, if price does manage to find support within 87.58 and 87.86, potentially we could see the Aussie CAD reverse, right? So this is a major support zone for Aussie CAD. So do take note that the Canadian dollar is pretty strong, and should Canadian inflation data, which is due tomorrow, coming out tomorrow at 12:30 p.m. GMT, if this data comes in stronger than expected, right, on a monthly basis and on an annualized basis, we could see demand for the Canadian dollar increase. So that would mean we could potentially see Australian Aussie CAD fall further. So do take note of that, of the uh, economic event coming out tomorrow, Canadian inflation data, that may potentially drive Aussie CAD lower. And based on technicals, we can see that the price level range between 87.58 and 87.86 is a pretty key support zone. So do take note of that. If price can stabilize around here, and if inflation data comes in softer than expected or lower than expectations, then potentially we have a fundamental catalyst to provide the reversal in Aussie CAD. Okay. Next up, I believe it was gold. Yes. So as we all know, dollar index and gold have a negative correlation. So that means when dollar index is rising, gold is usually falling, and vice versa. So since the dollar index looks to be selling off today, we can expect gold prices to be rising, right? Which is what we are seeing here on the 4-hour chart. But once again, let's start with the daily time frame. Right. Okay. So these are the levels that were um, identified earlier today, and we have also have the general have the forecast for the view for this week, that gold has bounced off a key support here at 1907. It is likely to continue its bounce today. So on a daily time frame, these are the support, immediate support and resistance levels. And this level at 1940 is a key intermediate resistance area, because if we do uh, expect gold prices to bounce this week, then the confirmation would come from prices breaking through this intermediate resistance at 1940. Right, so we can see today gold has indeed bounced pretty strongly off the first support and is heading towards the intermediate resistance at 1940. Right, and if it does break through this level cleanly, then definitely we have a very strong bullish case for gold. And the next resistance level would be at $1,981 per ounce. Okay, let's go into the 4-hour chart and see if we can identify any levels that are a bit closer. Actually, no, the levels are already quite close. Let's see if there's any Fibonacci retracement levels that line up with the overlaps. So we're going to use this swing high on 19th of June, we're going to swing low on 23rd of June. Okay, so we can see price running into uh, the 38.2% Fibonacci retracement level. We can also see the 50% Fibonacci retracement level lines up well with the uh, intermediate overlap as well. So what we're going to do, we're going to keep 38 and 50%. Right. Okay. So we can see, right, there is some resistance at 38.2% as well, because we can see there is a pretty decent overlap. We can see price bouncing off 1932 back in 30th of May, finding some decent support on 15th of June. Yeah, we can see the wicks below, but it did find pretty good support on 15th of June. And then you could argue as well, it found resistance last week, and now it does seem to be rising into or rather finding some resistance at 1,932. Okay, so we can see that on this leg of on this downward leg, we can see that the 38.2% and 50% Fibonacci retracement levels line up pretty well with the overlaps as well, right? So we have two factors that indicate to us that these are potentially significant resistance areas for gold. To the support side, naturally, we have the first support here identified on a daily chart, which is also sits slightly above the 61.8% Fibonacci retracement level done on this uh, leg of the move up here. Right, so this just to show you where this Fibonacci retracement was done. So this one, so this 61.8% Fibonacci retracement was found by using the swing low on 28th of May to the swing high on 4th of May. Sorry, not 28th of February, sorry. 28th of February to the swing high on 4th of May. Right. Okay, so yeah, so with the view that we expect dollar index to fall, so naturally dollar index is falling. Majority of the currencies versus the dollar are going to rise. So we expect euro dollar to rise, pound dollar to rise, dollar franc to fall, dollar cat to fall, dollar yen to fall as well. Right, but okay, but do take note that because some pairs may be much more weaker than the dollar itself. So like in this case, New Zealand dollar is actually weaker and is looks likely to trend lower. And similarly, the Aussie dollar as well could potentially drop lower as well, despite the dollar index falling. So the dollar index is falling, then it's quite likely we will see gold price push higher. So yeah, so do take note of the resistance, like a more immediate resistance zone between 1,932 and $1,940 per ounce. If we can clear this major resistance zone, then it's very likely we may see gold prices come up towards $1,960 an ounce. Okay, and then for those who are interested in oil, right? Okay, this is the daily chart for oil. So we can see a strong support zone here between $61.70 and $64.30 per barrel. This is a strong support zone. For something that's more uh, immediate in terms of level, resistance level, or support level, we can see that this level at 67.58 is a significant overlap as well. We can see price finding support around this level here over multiple instances. And in terms of first resistance, I think this is fine. First resistance at $73.80 is fine. So even if you go onto the 4-hour chart, you can see this is not too far. So basically, WTI oil has been ranging approximately between $67.50 and $74 per barrel since 4th of May. So coming to nearly 2 months, price has been ranging here, and oil fundamentals look generally weak. But that said, but since it's trading in a range, it's very likely we may see WTI oil move higher towards $70 and $71 over the next 1 or 2 days. We can see it finding nice support here last week, bouncing off $67.50, and it's quite likely we may see it push higher at least towards the $72 region over the next 1 or 2 days. Right, if you can see it's ranging, and if you expect the range trade to continue, then a push towards $72 per barrel for WTI oil is not out of the question. All right. Okay, so I've come to the end of today's analysis. Right. Thank you for your request, guys. It's a pleasure working through the analysis for you, for all of you, because like I don't cover all the pairs. Like Aussie cat is something new to me, but that's pretty interesting as well. Pound yen is also something that I don't cover regularly. So it's also interesting for me to look through such pairs with you together as well. All right. So once again, do take note of the key economic events coming out this week. Canadian inflation data on Tuesday, Aussie inflation data on Wednesday. We have the ECB forum on Wednesday as well. There could be we have four major central bank heads talking. Like there's definitely going to be high impact on currency markets. Then we also have unemployment claims from the US on Thursday, and then of course we have the PCE price index on inflation data coming out from the US on 30th of June as well. All right. So with that, I'm going to wrap up today's session. Thank you for your time. It's always been a pleasure doing the analysis with all of you, and great to see familiar faces coming back, tuning in regularly. All right. Uh, Stay tuned for the next webinars, and yeah, looking forward to seeing all of you at the next one. All right. Take care and have a great trading week. Thanks, everyone.